Today, I want to take you through one of the most important stories in the stock market right now, the big move we've seen in Intuitive Surgical, and why it matters far beyond just one company. This isn't just a random spike in a single stock. It's a move that tells us something about investor confidence, sector strength, future expectations, and how capital is rotating in this market. And perhaps most importantly, it gives us clues about what other stocks might be next. Let's begin with the facts. Intuitive Surgical reported its third quarter earnings for 2025 and absolutely crushed expectations. Revenue came in at roughly $2.51 billion, up about 23% year over year. That alone would have been strong. But the story doesn't stop at the top line. The company also saw procedure volumes rise significantly, and that's crucial because Intuitive Surgical's business model isn't just about selling robotic surgical systems. It's also about generating recurring revenue from the procedures themselves and the instruments used in them. The installed base of Da Vinci robotic systems grew, signaling strong demand from hospitals and surgical centers. When hospitals commit to buying a Da Vinci system, they're not just making a one-time purchase. They're effectively signing up for years of ongoing use, service, and consumable revenue streams for Intuitive. That's a very high-quality kind of growth. This earnings beat was not just a small win. The stock exploded in after-hours trading and early market action, climbing between 13 and 18% at different points. For a company of this size, that is a massive move. It reflects not just a good quarter, but a surge in investor confidence around its entire business trajectory. Now, why did the market reward this so aggressively? A few reasons stand out. First, this is structural growth, not a one-off bump. Intuitive Surgical operates in the growing field of minimally invasive and robotic-assisted surgery. These aren't fads. Hospitals are investing in technologies that improve patient outcomes, reduce recovery times, and increase surgical precision. Those trends are backed by long-term demographic forces like an aging population, rising chronic disease burdens, and demand for more efficient healthcare systems. Second, the guidance was strong. Investors aren't just buying today's earnings, they're buying tomorrow's expectations. Intuitive Surgical didn't just beat, they raised their outlook. That's a powerful signal in a market that's been selective, cautious, and even skeptical in other sectors. Third, they are executing flawlessly in a sector where execution matters. Robotics in healthcare is not a simple field. It involves regulatory approvals, hospital budget cycles, training surgeons, and global logistics. Companies that can navigate that complexity and still deliver growth stand out. And finally, this earnings beat landed at a moment in the market where investors are starving for clarity. In many other sectors, guidance has been murky or disappointing. Tech companies are facing mixed demand. Consumer names are getting squeezed by inflation and cautious spending. But Intuitive Surgical came out with numbers that were clean, clear, and strong. When clarity shows up, capital moves fast. But here's the bigger point. This isn't just about Intuitive Surgical itself. Moves like this have sector-wide implications. When a leader in a space performs this well, it doesn't just lift its own stock. It can shift sentiment toward its entire industry. Think of it like this. When a major semiconductor company issues strong guidance, often the entire chip sector rallies. When a leading retailer beats expectations, other retail names get a lift. In healthcare and medtech, Intuitive Surgical is that kind of bellwether. So let's unpack what that might mean. Investors looking at this move are likely asking themselves, if Intuitive is showing this kind of strength, who else might follow? Who has upcoming earnings or catalysts that could create similar excitement? One name that stands out is ICU Medical. The company announced the timing of its Q3 2025 earnings release, and while it's not in surgical robotics, it plays in the critical care and infusion therapy segment, an adjacent corner of the medtech world. ICU Medical develops and sells devices for infusion therapy, vascular access, and critical care monitoring. Why does this matter? Because the same macro trends driving Intuitive Surgical's growth, hospitals investing in durable, efficiency-driven medical technology, also benefit companies like ICU Medical. If they post strong numbers or issue confident guidance, they may not see a 13% after-hours spike, but they could still capture some of this positive momentum. Another important name is Boston Scientific Corporation. Boston Scientific just reported its Q3 results as well, coming in ahead of expectations. Net sales were about $565 billion, up over 20% year over year. This is another company tied closely to healthcare innovation, minimally invasive technology, and procedure growth. Boston Scientific's strength further confirms the broader trend we're seeing. It's not just one company having a good quarter, it's a whole segment of healthcare that's performing well. When two major players in related fields are reporting growth of 20% or more, that's not noise. That's a signal. Wait, what makes this particularly interesting is that the market has been starved for leadership sectors. Tech has been volatile. Energy has been choppy. Consumer spending is under scrutiny. But healthcare and medical technology? That's a space that investors often turn to when they want growth with defensiveness. When a sector like this starts to lead, it doesn't just create opportunities in the headline names. It can also create momentum in smaller, less followed companies in the same space. For example, device makers, robotics component suppliers, imaging technology firms, and certain healthcare software providers often benefit from a rising tide in healthcare investment. Funds rotating into the sector don't always pile into just one or two big names. They diversify across multiple players. This is why it's so important to pay attention to upcoming catalysts. Intuitive Surgical has already reported, but other names in the space have earnings coming up soon. ICU Medical's Q3 release is one of them. Several smaller medtech companies will also report over the next 2 weeks. Even some Medtronic product updates and other device announcements could act as sector catalysts. Now, there's also a technical layer to this story. When a stock like Intuitive Surgical moves nearly 15% in a single session, it draws in momentum traders, institutional buyers, and algorithmic funds that chase relative strength. That inflow of capital can spill into peer stocks, even those that haven't reported yet. Sometimes that means other healthcare names rise simply because the sector looks stronger. Other times it means those stocks face higher expectations heading into their own events. Either way, it sets up a window of opportunity. For short-term traders, this can mean elevated volatility and clear breakout or breakdown setups. For investors, it can mean a sector worth building exposure to if the underlying fundamentals remain strong. But, and this is important, elevated expectations cut both ways. If a peer company reports solid numbers but fails to deliver the kind of upside Intuitive Surgical did, the market can react sharply in the opposite direction. We've seen it countless times. One company beats big, others follow, and then when the next company's results are merely good, they sell off because investors were expecting great. This is why understanding the context behind Intuitive Surgical's move matters just as much as the move itself. This isn't a meme stock surge or a hype-driven run. This is an earnings-driven rally in a sector that already had credibility. The guidance is clear, the fundamentals are strong, and the macro backdrop, with hospitals continuing to invest in efficient technologies, supports the story. Let's take a moment to look at the kind of signals investors should watch in the coming sessions. First, watch for sector breadth. If this move is real and sustainable, we should start to see other medtech and healthcare names firm up and attract inflows. That doesn't necessarily mean 10% spikes across the board, but it does mean more steady accumulation and stronger price action. Second, pay attention to earnings reactions from peers. ICU Medical, Boston Scientific, and other device companies can either confirm this trend or contradict it. If several of them post strong results, it solidifies healthcare as a leadership group in this earnings cycle. Third, keep an eye on macro headlines that could affect the sector. Tariffs, healthcare policy changes, hospital budget trends, and currency fluctuations can all influence sentiment in this space. Fourth, consider the longer-term implications. If this sector enters a leadership phase, it could become a defensive growth area in portfolios over the next several quarters. Healthcare often behaves as a hybrid sector, not as cyclical as industrials, but with enough innovation to attract growth capital. Another interesting angle is the technological moat around companies like Intuitive Surgical. Their Da Vinci platform isn't easily replicated. That kind of first mover advantage and network effect creates a durable competitive edge, which institutional investors value highly. It's one reason why these kinds of names often trade at premium valuations, and why strong earnings can fuel sustained rallies, not just one-day pops. Meanwhile, smaller or more specialized companies in the medtech ecosystem often benefit from partnerships and procurement trends tied to Intuitive's success. Component makers, accessory developers, and service providers can also be indirect beneficiaries. This creates multiple potential opportunities, not just in the headline stock. Looking ahead to the next week or two, I'll be closely tracking earnings and event calendars across the medtech landscape. That includes ICU Medical, Boston Scientific, Medtronic, and a few others in adjacent areas like imaging and diagnostic tools. If multiple names in the space deliver strong results, it could mark the early stages of a broader rotation into healthcare and medical devices. That kind of move can last for weeks or months, especially if other sectors are stuck in uncertainty. But as always, elevated expectations require discipline. Not every company will match Intuitive Surgical's blowout quarter, and not every earnings release will lead to a double-digit pop. Some will disappoint, some will consolidate, and some will surge. For traders, that means being selective and tactical. For investors, it means building positions with patience and a clear understanding of the underlying fundamentals. In short, today's move by Intuitive Surgical is more than just a headline. It's a sector signal. It tells us where confidence is building, where capital is flowing, and where to look for the next opportunities. The fact that a large-cap medical technology company delivered a nearly 15% move on earnings says a lot about where the market is finding conviction in an otherwise cautious environment. I'll be watching closely to see whether this strength broadens out to other medtech names over the coming days. ICU Medical's upcoming earnings, Boston Scientific's follow-through, and other healthcare events will be key markers. If this momentum holds, healthcare could very well become one of the most interesting and resilient sectors of this earnings season. And if you're following the markets daily, this is exactly the kind of inflection point worth paying attention to. If this breakdown was helpful, make sure to like, subscribe, and turn on notifications so you don't miss the next update when these upcoming earnings hit. The market is moving fast, but if you understand the story beneath the surface, you can stay ahead of it.